Hello, hello, hello. Welcome to Our Stock Trades. In this video, we're going to go ahead and do a Barclays Global Healthcare Conference for the 2023 analysis that we just had a couple days ago. This is going to be a lot of repetition from the earnings report that happened 2 weeks ago. We went ahead in our exclusive research center, conglomerated everything, and pretty much 30 minutes of back and forth between the analyst and Scott, the CFO of Clover, is going to be condensed down to under 10 minutes. So let's get straight to it. So the CFO talked about a shift from growth to profitability, aka how the 3.5 stars are going to essentially create a tailwind for them. And they talked about the economics of acquiring new members. Obviously, new members are unprofitable while older members are profitable. So they're wanting to go ahead and prioritize older members and decrease newer members, as that will lead them to a path that Wall Street and retail investors don't want them to be on. The strategy is going to be a decrease of revenue growth to maximize profitability, which you already have figured out from the 2023 estimates. The Barclays analyst understands these are challenging times, and the goal here is any company that survives this mess is going to be stronger and is going to acquire market share as it rides up the capitalistic nature of the United States as a whole. Now, Clover Health's public trade, when it was publicly traded, it transitioned from high growth to meeting profitability expectations. So back in 2020, when Clover became a SPAC, many investors didn't really care about profitability. Their goal was, spread the Clover Assistant everywhere. Just spread it right now. Burn as much cash as possible. Just burn as much cash as possible and get your Clover Assistant in the hands of many people. Now market sentiment has changed. They need to scale back a little bit. Not to worry, once market conditions get better, which we have to obviously go through a recession. Who knows? Maybe soft landing. Then they can go ahead and turn on the growth machine. Now, pathways to profitability. So if you go ahead and take a look between 2021 and 2022 on their particular part of their business that is profitable, there was or semi-profitable. There's a decrease in MCR, which is a 400 basis point reduction. And if you compare that to the incumbents when they first started off, it is actually really significant. So if you go to the profitability date, the analyst pretty much asked him, can you give us a date on when you're going to be profitable? They said they did not have a specific date and time. They're just focused on milestones right now. So personally, I would obviously, as someone, who's part of the company as an investor here, I would honestly want to have a date, but I understand why they didn't, because then if they missed that, that's going to cause a bunch of problems. So just keep it open. I understand. All right, Barclays, the second part 2 summary. The 3.5 star rating, which we talked about with this here, is going to give them a higher payout ratio over time, which is why it is a tailwind. For 2023 updates, there really isn't any major updates since the last earnings report that happened 2 weeks ago. Timeline for 4-star rating, obviously they want to aim for 4-star, but Scott makes sure that it's not contingent to achieve profitability. In fact, profitability is achievable at the already 3.5 star rating that they have. Now, we all want to hear more about this, so the Clover Assistant comparison. They did say there was a 1,000 basis point difference in MCR, which literally blows the competition out of the water, but there was a brief discussion of only 1 minute. Ladies and gentlemen, only 1 minute. I mean, I would really want more emphasis on this, but again, they're focusing on profitability. That's totally fine, but once that profitability metric is met, and post 2025, I definitely want to learn more about the Clover Assistant. They need to show us a little bit more about what they do. Overall, that's pretty much the meeting. You can go over it and do 30 minutes, but pretty much this is everything that they basically talked about in less than 4 minutes. I'll see you on the next one.